Well, we now have we are now discussing a stock which has seen just actually a one-way movement in the past 2 years that I can see the chart on my monitor. Maybe pull up a 1 month of Godrej Consumer Products. That's the stock I'm talking about. No, not intraday. We have to pull up a 1 year, and clearly one of the better performing stocks, a defensive sector, but clearly an outperforming stock. Joining us now is Mr. A. Mahendran, Managing Director of Godrej Consumer Products. Mr. Mahendran, good morning and good to have you on the show. Well, first up, tell us what is the kind of pace of growth that you are expecting this quarter and this year and the next, considering that you all have some imponderables which investors will not be able to gauge. For instance, multi-brand retail is here. Even if it is in pockets, it will mean you have more places, more outlets for your products. How do you look at growth? Will it be stepped up from the historical growth that we have seen in Godrej products?
But as the Godrej Consumer Products, the growth rate what we are reporting is pretty above the category, above the market, and we've been reporting a very excellent growth rate in the last 2 to 3 years. We will be maintaining that a good trajectory of growth, but at the same time, when I look at the FDI opening up the multi-retail brands, etc., so I see the next year, in spite of the having the slightly slowdown, if you look at, if you may say so, in terms of consumption in the current quarter. This will get facilitated by this kind of FDI opening up, etc., particularly all FMCG consumers. And we as Godrej, our relationship with the current retail chains, etc., and our market share in that are pretty good and pretty healthy. Our growth rate are very good in the retail sector, the modern retail, and we hope and we expect to post continuously in years to come a good growth rate.
So something better than the 35% pro rata, 35% that you are maintaining, or you will just maintain that?
See, as on today, if you ask me, I will certainly say that we are confident to maintain the same growth rate.
Okay. Mr. Mahendran, afternoon. Thanks for joining us. Last quarter, your margins took a bit of a hit on the back of increased ad spends. In this quarter, have we seen a similar increase in ad spends, maybe due to other launches, which could keep your margins subdued at what the levels we saw last quarter?
Yeah, our ad spend level will be maintained as far as this quarter is concerned. And because when you did some launches in the last quarter, you need to maintain the spend levels. But at the same time, the margins are pretty good. It is quite looking healthy. You know, the commodity prices are softened fairly good. That helps us a lot. But as an FMCG brand player, and when you get into a new product launches, etc., you need to maintain the momentum. Okay. Otherwise, you're not going to get real benefit of the new product launches.
Okay, so I have to interrupt you because we are getting the government's mid-year economic review, which has been announced announced in Delhi, and they're expecting the growth to be between 5.7 and 5.9. That's quite a come down from the 7.6 that circles in Delhi were maintaining. At least that was the official stance. 5.7 to 5.9 may still be ambitious. Remember, the first half is 5.4. average, taking the 2 quarters together. The third quarter will still be very tough, going by the kind of trends we have seen, but fourth quarter we have a very low base, so that perhaps will work in favor of giving a slightly maybe 6-ish kind of number. Inflation likely to moderate in January, March. We have to check more about any statement they would be making about the fisc. Chances are that since the mid-year economic review also comes out from Finance Ministry,
well, Lata,
it will stick to 5.3.
I have some more statements about the fiscal as you were looking out for. They will contain the fiscal gap at 5.3% of their GDP. So they continue to maintain that the fiscal deficit target remains at 5.3%. So they're reiterating and maintaining that. The
a little ambitious on inflation, but I think they would be on the right track given the sharp fall in inflation in the past 2 months. Expect inflation to be between 6.8 and 7.0. By March. The RBI's estimate was 7, but chances are that it could be 6.8. That was what our poll also threw up. There are significant worries about the trade gap. Trade gap not to be significantly higher than FY12, so they're expecting some miracles in the next 5 months. We have the data till October, and that's not a very happy trade gap number at all, but there is a hope that perhaps imports would be brought down. Trade deficit is seen somewhat higher than FY12, but not to be significantly higher. That seems to be the mid-year review's assessment. The economy is poised for moderate acceleration in second half, and hence the expectation of 5.7 to 5.9. FY13 current account gap is seen lower than FY12. That's not a big achievement actually. We did 4.25 in terms of current account deficit in FY12. We already have a number of 3.9 in the first half of FY13. So if it is lower than 4.25, it would still be an ugly 4% number perhaps, but the assessment is at least that it will not get worse than that. Those are the top headlines that are coming. Need to address structural supply side bottlenecks. Reasons to believe that the slowdown has bottomed out. Mr. Mahendran, you're the right person to address this issue. Reasons to believe the slowdown has bottomed out. Do you see it in demand?
Yes, I do. The reasons to believe is that yes, it's bottomed out, and we expect a fairly good growth as far as the economy is concerned.
Okay.
Particularly, definitely in the next quarter, at least in the current as well as next quarter. Yeah.
Okay, so should we think that you will be concentrating more on the domestic economy, or would your international ambitions be more?
Yes, our focus is on both. Always, because we have ambitiously entered in the last 2 years in the international markets, the emerging markets. So we will have equal weightage to both, not necessarily that we focus only on domestic and not on international. As a company which we have, 2/3 from India and 1/3 from outside as a turnover, and we will maintain the same weightage and the focus on both.
Actually, there has been no reaction in the markets on the mid-year economic review. Another point that we forgot to highlight is that the fall in inflation to facilitate monetary easing is what the government is also saying. But largely no change, still at that 58-66 odd mark, more or less expected by the markets. Mr. Mahendran, coming back to the business of your current market share in soaps is estimated to be about 15 to 16%. Do you see it going up in the next 1 year or so, the market share in soaps?
We do hope our market share goes up, and
where are you
the hope is
focused,
always there.
Not hope. What is your strategy? Are you looking at?
We have kept all strategies in place, and all strategies are triggered now. So
which would be the products you would really ride on in the next couple of years?
In terms of categories, if you say, we have soaps as one category, we have hair color as another category, we have household insecticides. There are 3 categories we focus on.
Okay.
And as far as market share is concerned, particularly in the soaps, we definitely hope the market share will go up.
Okay. If you think that growth has perhaps bottomed out, do you see a possibility of the company taking price hikes in your various segments? Or if you could tell us, where would we see price hikes maybe in the next 6 months?
Yeah.
You see potential?
See, as far as price hikes are concerned, it's purely on the category in which the leader of the category is. In the personal wash, we are number 2 in the country. We are not the leader. So we leave it to the leader to decide. And we follow the leader normally. But if you look at household insecticide and hair color, we are the leaders in India, the market leaders. And as far as price hike is concerned, depends on the various factors of cost push, etc. But right now, we do not see much of price hike.
So you're regularly announcing, the acquisitions abroad. Is there something that we should expect? Is that a strategy that you very strongly rely on? Should we hear something before the fiscal year ends?
See, as a strategy, yes, inorganic growth is one of our important pillar. We've been following that for the last 3-4 years. We are looking at it, and we continue to focus on inorganic growth platform. We have a separate cell which works on that, and as and when we conclude, we do announce, etc. And to answer your question, we definitely hope we conclude some good acquisition as we go past our future. But certainly inorganic growth is very important for us, yes.
We'll leave it at that, sir. Mid-year economic review is just staring at us. More on the review in a minute. Mr. Mahendran, thanks a lot for joining us.
Thank you.